And yeah, if you want to get started, because I know we have a
Sure.
lot to talk about today, and I think, one of the things our clients come to us with is, how do I find trade ideas? How do I find some movers for monthly income? We all know that we have everybody covered on long-term investing, and that's something when you're part of our group, you are presented with a portfolio that I have on in my account. You can create a similar portfolio of ETFs or stocks where you're selling covered calls, where you're selling cash secured puts, with where you would be okay with owning a stock. Dan and I, we chose American Airlines AAL months ago, and we're making thousands of dollars, and it's only up from there because we bought call contracts very low, and we have an expiration on those contracts in November.
Yeah,
That's kind of cool.
yeah, exactly. I think we bought into that.
That was a winner.
That was one of the. Actually, I have that. I'll share my screen.
Yeah.
Can you make me a host? Sorry, I don't know if I'm joining with the wrong link or something, but
You may be, but that's okay. I am going to make you a co-host. There you go. You're a
great.
panelist. Yeah, cool. And if I'm looking up, it's because I have another screen where I'm looking at my accounts while I'm with all of you too. So we're real time here. We are real time here.
Yeah, so American Airlines, right? Obviously, a huge run lately. It's coming back to reality, but it was down quite a bit today. It is recovering. Hopefully going to end on a positive note today. But
Got rid
regardless,
of, just so you know, I bought back some of those contracts that we sold to
Mhm.
offset the price of the November contract. So I was able to buy them back low today. So that worked out really well.
Yeah, that's a good. It's a good opportunity for that, and something that we did originally with American Airlines. Down it was at about nine something. Was we entered into a diagonal spread, and I'm going to pull up my slides on that
Diagonal.
exact.
Yeah, diagonal spreads are a really wonderful way to make money in options in a way that one would maybe buy the underlying, right? And what that means is I'm not tying up as much money as buying the underlying stock, and I have an opportunity to profit long term.
Yeah, sure. I mean, if you've identified a stock, right, and or a company, and
And
you're
by the way, before we get started,
Mhm.
let's say the legal statement
Yeah,
here
no,
too.
absolutely. I don't want to gloss over that. So, the trades I'm going to show you are trades I've taken. That being said, these are not trade recommendations, right? We're doing this for learning purposes only. You have to make your own evaluations and choices in trading. Trading involves risk, and we are not financial advisors. We're not licensed financial advisors.
Thank you.
Um, Again, if you guys want to read that, go for it, but nothing new there.
Right. If
Um,
you have any doubts about anything that we are sharing today, we suggest that you speak to a licensed financial advisor.
exactly. So diagonal spreads. Back to the fun stuff. Diagonal spreads.
Mm.
So for those of you that have identified stocks, right? Maybe that they haven't recovered very well during this uptick in the markets. Stocks that you're comfortable going long, you'd be comfortable going long the stock. A diagonal spread is a very good way to do that, and it will be a long call diagonal spread. What a diagonal essentially is we're going to go out to the end of the year, and we're going to buy a call just out of the money. So at the time, American Airlines was sitting around $9.50 a share. We're going to buy a call we did buy a call for November at a strike price of 12.
Yeah,
Okay.
at 12.
And
That's what
now,
I'm looking at. And which, by the way, I just want to stop. Out of the money means that there's no intrinsic value, right? So why would anybody want to exercise buying American Airlines at 12 when the price of American Airlines is at 9? So that's what out of the money means.
it's a speculative play, right?
Yes.
Um, And so we bought the November 20 calls at 12. Okay, with me on that. So we're saying by the end of the year, we think American Airlines is going to be above 12.
Yeah.
But now those calls were quite expensive at the time. I believe they were about $3.60 or something like that each at the time.
But relatively speaking, though, it's not all that bad, right?
Exactly. But what we've done to lower our costs then is, instead of just maintaining this long call position, right, is by selling the May 15s. Just remember, this was in I think March we put this on.
Yeah.
So go much closer, sell the May 15s against it to recoup a lot of our cost at a higher strike price, which gives us, you can see this long profitability area to the top.
And really what we're saying is we believe that American Airlines will be, over 12 actually, plus $2.55, by November, right? Because that's how much it cost us to get into this. And we reduced what we're paying here by the belief that, oh, and by the way, we don't believe that it will go over 15 by May 15th.
Exactly, and it didn't, right? And it didn't go above May. And this, so what happens then is that these calls expire worthless, okay? We collected the full premium on them. I believe that at May 15th, price was still around pretty close to 12, maybe 11, maybe 12. Actually, we have the data right here, we can check.
Yeah.
May, we topped out at, 12 and a half, 12.7, May 15th. We actually took a dip. Remember, this was when Warren Buffett was telling everybody that, the wings are falling
off planes,
and there's no more airlines and so on and so forth. Saying he's going to dump all of his American Airlines stock, and rightfully so. I mean, he's a big voice in the industry, and price fell a bit from there to a low of 8.25. Yeah, and then off to the races, right? And so what we were left with is, essentially what I'm left with right now is just 25 calls at 12, which effectively means that for every dollar American Airlines goes up, I'm making
$2,500
till the end of the year. So if we end up, hopefully back up here. I mean, who knows? But that would be ideal. Maybe we end up at 25.
Mm-hmm.
That represents a $15,000 winner.
Yeah, so please, we have people joining us on Facebook. We have people here in the chat on the webinar. In the chat box, tell us how exciting would it be. And I really want to do the math on that right now. I have my little calculator out, okay? So basically, 25 contracts at $2.55 a contract times 100, right? Right?
Yes.
So let's do Dan's little calculation here. I have the calculator app. Boom. Okay, so it costs you 25 times $2.55 times 100. It costs you $6,375 to get into this opportunity. So let's say American went to 28 by November, right? So then what I'm doing is I'm subtracting 28 minus, right, the 12 plus the 255, which is 14.55. So that's 13.45, right? So let's even just say, right, so that's the difference. And he's going to make, so let's take that 13 and multiply that by $2,500. So you have an opportunity to make $32,500 by just tying up $6,375. So that is, just if I'm dividing 32,500 divided by 6,375, that's over a 500% rate of return without having to tie up more than $7,000, right? Please tell us right here in the chat, in the Facebook, how exciting that is, right? For me to make $32,500, I would have to buy,
I'll take that. I need more of those in my life.
right?
Yeah,
I
I
would
was
have to
in
buy how
state.
much of, think about that, because that's 13 points, right? So 13 times 2,000 equals 26,000. I would have to have bought 2,500 shares of American at $9. And that would have cost me $22,500 versus the $63.75. This is why we love options. The leverage
That's right.
here. And when we say the word leverage, it is a good thing. It means I am spending less to make more. And we're dialing down the risk by saying, this is all I am risking here. If I bought that underlying stock, I mean, albeit it was only $9 at this time, so it can't go below zero, but still we have a risk when we buy the underlying.
Yeah, sure. I mean, and that is
And
the
Ken
crux of it
doesn't
all.
understand the max risk. Yeah, the max risk, Ken, is what we paid to get into the contracts. That's the max risk, always with options. That's why we want you trading in, investing with us, everybody. Options rock. Options rock.
I mean, you see, like there's other opportunities out there too, right? I mean, like we're not just gonna hang our hats on that winner, right? We're gonna go find some more.
Yeah. So let's find some
So let's
more.
find some more.
Yeah.
So, you know, this is something we were talking about in our Monday class.
I actually put this on.
CCL, it's probably down a little bit just because CCL pulled back 5% today.
Yeah.
But
But it's not
regardless,
down a lot.
yeah,
It's not down
still
a lot.
good.
It's down $300 today, but I'm in this trade until, January 2021. So I'm okay with that.
So
Right
same,
now they're 21 and a half, right? And we're just saying that by January 2021, we believe this is going to be above 25.
exactly. So with this modeled right out here, and I'll walk through the actual construction of the trade in a second. But the idea, right, is to find stocks, and again, to find blue chip, big companies. We're not
Right.
talking about some fringe pharma company that might cure corona. Like, we're not talking about that. We're
No.
talking about the
The real
fundamental,
deal.
yeah, like the stocks in the S&P 500. Okay, I would even limit it. I would almost limit the strategy to blue chip stocks, but to find companies that have recovered by less than 50% from their original, well, I guess not their original highs, their highs their pre-corona highs, right? And
Yeah.
and a lot of those companies like this CCL, Carnival Cruise Lines, right? It's a cruise company. So, well, yeah, they're obviously taking a beating right now, but they have probably billions and billions of dollars worth of capital sitting around the world and floating around the world. And they're not going anywhere. Like, there's nowhere for them to go in terms
No.
of.
And they may change their business model. They may
Sure.
do other things, but the bottom line is they have valuable assets.
Sure. Yeah, absolutely. And to see them at a depressed price still, they're pre-corona, they were at 52, and they bottomed out at 8, give or take, and now they're sitting at 21. You identify that at least there's some upside there, right? At least there's something, right? And so let's look at that. Let's look at the same trade that we put on American. Let's look at this.
CCL. And I've got a bunch of them for you to look at today too.
Sure.
So,
yeah, that article you sent was it's great for those, right?
yeah.
I mean, the only thing I would stay away from is more like the heavy durable manufacturing, like the cars, more so, because those really get hit at recession time. But like beyond that, like I think even GE, like they're so diversified around other things.
Oh, I'm loving
fine.
GE. In fact, GE, I have, just so you know, I bought the 6 calls on GE expiring next week, and
Sure.
GE's close to 8. So, and I paid 47 cents for that contract, which was not a lot. Cool. All right.
So that's what, like a 300-400% return for you on that then?
Yeah.
It's
In a month.
$6 to $8. Yeah,
In
take
a
those.
month.
Don't need too many of those.
Wow.
So let's look at this diagonal. Okay. Same example. We went out, current price is 21.61. Okay. We're saying we think that we're going to recover past 25 by the end of the year.
Yes.
By the end of the year, by January, right?
That's the idea.
Middle of January. And yeah, that's our, okay, we're not guaranteeing it, right? That's what this is what the outlook of our trade is. Okay.
Yeah.
We're using calls, right? As with American Airlines, we're going to use calls because calls appreciate in value as the market goes up past them, right? So if we're saying we want it to go up, we're going to use calls. We could do the same trade if we said something was going to go down. We would just flip it and do it to the other side. But
right. So again, I just want to mention, once we recover, once we recoup what we bought, the break even, for every point these underlyings go, we make $100 per every contract that we purchased, which rocks.
Mm-hmm. Yeah,
that's like owning 100 shares.
Exactly. Every contract is redeemable for 100 shares. Yeah, every options contract. And again, that's in 99% of cases. There are cases where that's not it, but if you ever want to check, go to Add Simulated Trades. That's what this number 100 means beside them here. Expiry date, days till expiry, share remuneration value, 100. But yeah, like every I mean, the odd one is not 100, but like for the most part, it's always 100. But anyway, back to the risk profile. So let's talk about this trade. All right. So we've bought the 25s and we've sold the 30s to recoup some of our value. Now, if we wanted to have a more narrow trade, we could sell, instead of the 30s, right, we could maybe sell the 27.5s. It makes the trade a bit cheaper. But the reason why I like doing it with 30s is because it takes away that moonshot risk, right? It takes away, for some reason, Carnival jumps to like 60, which it probably won't, but just in case, you're still profitable, right? You see this, if at any time we jump up here, we're $1,400 profitable, okay? Whereas if we did, a lower value here, let's say 27.5, the trade is cheaper to get into, but you never want to like get burned by a good idea, right? The good idea is, I think Carnival is going to rebound huge, and then it rebounds bigger than you thought it did, and all of a sudden you're losing money. So that's like just something that irks me. So I don't like to do that. So that's tip number one. When you're constructing these calendars in your risk profile section, make sure that the tail, the top side tail of it, is above 0. Okay, so you can see here that this one is negative $580. If we move it to 30, which is the trade we talked about on Monday, it's $1,400. And again, this is on 10 contracts. You can scale it up or down as you see fit. But the idea with this trade, right, is that even if price goes flat for the next couple months past July, and we're sitting, let's fast forward to July. July 17th is our expiry. So let's go right to July 17th. If we're sitting really anywhere above 20 at that time, we're profitable. Okay. And the best part about this is once July 17th passes, right, if we're not above 30, right, because our short strikes, remember, are 30 here for July, our position shifts into a long only position. Okay, our position shifts to just be purely long CCL, which then presents us with the opportunity of recouping additional capital against our long calls. So July comes up, great. So now we have an open slot. We can sell the Octobers, say, and we'll go into October and we'll sell the October 30s, right? Now we're not going to get that much for them, right? Because remember, this is the price of the October 30s as of today, right? But moving forward in time, they'll be worth less. So say we can recoup an additional dollar. And that's very conservative. Let's say $1.25. Say we can recoup an additional $1.25. Well, what we've effectively done now is lowered our cost basis for the original trade. We are ratcheting down the price that we paid for these calls more and more over time. And that's the management that I like to see in a diagonal like this, right? We're going to recoup some of the money up front. Time will go on. The calls that we sold against our long end of the year calls will expire worthless, hopefully. If those expire, we're going to sell more calls further away. And in this fashion of just ratcheting down our cost basis over and over, we're left with a very profitable position most of the time. Now remember, if we're sitting in this in this trade, right, and for some reason CCL goes above 30, like toward our expiry, so we'll go forward to the middle of July. We're sitting here, maybe July 13th, and we're sitting at 40. That's fine. We'll just exit the whole trade for profit. This is, what we could have done on American Airlines. We could have exited the whole thing for profit, but we felt very strongly that this is one that, given the velocity of the move, exactly, given the velocity of the move, this is one that we're just going to hold till the end of the year.
Yeah, the airlines have been amazing. And I shared those with some people on Facebook. One of the things I do, Dan, is I mentor teenagers and I get them introduced to equities, stocks. I teach them what exchange traded funds are relative to mutual funds. And one of my mentees, his name is Nick, he's 16 years old. I met him with his parents at a business networking session.
Sure.
And he's a smart kid. And he said, my mom and dad gave me $500. And I said, awesome, let's look at what you would like to invest in. And he said, Dawn, he wants to go into the military, and he's really interested in flying. And he said, I'd like to buy United Airlines. And at that time, if you could bring up United, please do, UAL. At the time that Nick purchased United Airlines, United was at $23 a share. Where are we sitting today? We're at 40.
41.
Yesterday, I think they were at 49 like a day or two ago. So this young man, in a month's time, took his account from $23 times 21 to 40 times 21. I mean, he almost doubled. At the time that we were speaking, he more than doubled his initial investment. And yes, there were ways. United's not going anywhere. I mean, look at the strength in what happened before the 19th. Look at the recovery. We're less than 50%. So, this goes on our shopping list, Dan, of potential equities where we can do a diagonal strategy where we believe in this company in the long term. And instead of buying the 1,000 shares of the underlying, for $40,000, we could spend a whole lot less. We could, purchase 10 contracts and make $1,000 for every point that United goes up. And that's what's so awesome about options.
Exactly. There are caveats here, like with any trade, right? And we learn more about those in our group, in our in-depth session. I'm not going to go into a ton of them here, but one thing to consider when trading diagonals also is the volatility effect. Okay. So they're very sensitive to short-term volatility. So if you're ever holding the short strikes when price falls rapidly, it can depress your earnings temporarily. And these are the type of things that, a little bit more advanced, but we'll talk about them in more detail in the future, but just a little asterisks there to put there. You have to be sensitive to volatility with these two. I'm going to change this to call. Because there are different types of diagonals also. And guess what? When the markets eventually start to tank, we'll just start doing these the other way. Do the put side instead.
Yeah.
right?
Exactly. And we were reading articles today, just so you know, where I don't believe we're out of the woods. Everybody who I speak to does not believe that we're out of the woods. There's no underlying support, no fundamental support that is backing, what's happening in the markets right now. And we came across an article today that talked about how many millennials, right? Many young people who are now at home because they're not working, they're not going into the office, are day trading, and affecting the volatility in the market based on the moves that they're making, which has no tie to the fundamentals. So if you're in a position where somebody else is managing your money and you're, buy and holding, I'm just here to tell you that's like wishing and hoping, and it's not a strategy in today's market. And we really are appealing to you today to get more financially literate. And, Dan and I are going to talk about a virtual summit that we're doing, not this coming Friday, but next Friday, that you're invited to. It is free. And if you know that you just want to jump on the bandwagon and be in our tribe of incredible, determined, eager investors and traders, we have a monthly fee for that, and you're in our club. So we'll talk to you more about that.
Sure. Yeah, and Don, to your point, right, and to anybody holding those mutual funds in their portfolio or the IRA or whatnot, just think about this thing alone. So this year, top to bottom. So say from February until you said bottomed out in April, March 20th. What percentage of your portfolio go down, and how much of that recovered? Just simply that, nothing else. Remember, everything that was sold to you via a mutual fund was touted as being more diversified than the market, and I'm actively managing it, and so on and so forth. Because the market's tanked, and they've almost fully recovered. And it's like other indexes. I use the SPY always, but the Dow, others, the Nasdaq has fully recovered.
Right, the Nasdaq has fully recovered.
So, just something to consider, food for thought, right? If you're still sitting, with a 15%-ish loss in your portfolio on the year, maybe reconsider.
Right, reconsider, doing what you're doing, because there are ways of maintaining your long-term wealth in a diversified fashion that will turn up your rate of return through covered calls. And that's that's my bag. That's my piece of what Dan and I do together. Maybe it's because I'm the old lady, Dan, at 56 years old, where you're the Sprite millennial. But that's why I think you and I are such a great dynamic duo for all of this, because we have our long-term investments. Our short-term speculation does not impact our long-term investments. This is for income. This is for adding to the long-term investment portfolio. So we get to $1 million, $2 million, $3 million, $5 million in record time, as opposed to paying somebody 1 or 2% every year to lose your money for you.
Sure. Yeah. Even in the worst case scenario, you can lose your own money for free. but no, we hold your hand along the way, right? We're not throwing anyone in our group into the lions and saying, figure it out, right? Starting them slow, giving them ideas. Having a class every Monday, right? We have an hour and a half class every Monday where we talk about different concepts. And, a lot of it, right, is the basics, right? A lot of it is the basics, right? Mastering this quadrant of the four things you can do with options. And, for many people that joined us, they didn't even know this when they started. And now they're coming to us and suggesting trades.
Oh, yeah.
To us and bouncing ideas off of us.
Britt, who is here in the group, she said, Dawn, look at Beyond. And at the time we looked at it, we created a bullish strategy. And I got out of that trade for $1,400 in my pocket without tying up much of my account.
Mm-hmm.
$1,400
awesome
this week, $1,200 the next week. And, you're bringing in income that can pay your rent while you're not tied to the computer, because what's so awesome about what we do is we set it and we forget it, right? Britt, what is she saying in the chat here? She's sharing that just think if everyone made 2 trades a month and made an extra, even $750 a month, right?
Mhm.
Yeah.
Yeah, I mean, it adds up. Right? It adds up.
All
So,
right. So do you want to look at some more?
yeah, sure.
Let me give you a list of what within our WhatsApp group. By the way, if you are with us every day, we're feeding you ideas to look at. So inside our WhatsApp group, I shared an article from Business Insider, and I'm going to that article right now. Carnival is one of the stocks that they speak about here, Dan. Let me take a look at what else is here that we could look at. Wynn. Why don't we look at Wynn Resorts?
What's the
Let's see, I'm having a slow internet connection here, so let me find that for you.
WYNN?
Wynn is WYNN. So let's take a look at Wynn and go from, yeah, the high
Yeah.
to where they are right now.
So,
I mean, they had a nice recovery. They went from 35 to 100. Yeah.
They have, and this would be just like the caution of how I would approach this one in particular. We're not necessarily looking at high to low, right? We're looking at just pre-corona.
Right, February
Just
19th.
pre-corona, yeah. So drawing our Fibonacci on here, and again, we did a whole class on Fibonacci. I'm not going to recover it right now, but
Fibonacci retracement is the bomb.
I mean, yeah, you can make the argument to use this point up here or this point. I'm going to use this one.
Oh, okay.
So we've recovered
More than 50%.
Yeah, more than 50, even if we use this point.
Yeah, so,
Yeah,
you know,
solid.
we're really looking for a recovery of less than 50% for this strategy that we're building out on, you know, long-term diagonals. What we're talking, you know, when we talk long-term diagonals, we're referring to, hey, we think that these particular equities by the end of the year will recover more than 50% of how they were impacted after the corona. Yeah.
Yeah, exactly. Sorry, I was putting my CCL trade back on. I didn't get filled yesterday, probably for the best, but I'm in on the trade. I'm trying to get in on that one.
What about XOM? Let's look at Exxon. Okay. So boy, Exxon took a real fall here. You're going to use that. Okay. February 19th. Yeah. All right. So yeah, it would have been better a little earlier on, but we're okay there, right? We were saying we love banks, the financial sector.
I want to look at Schwab.
Look at, okay. And I have another one for you to look at too. Yeah, let's look at Schwab. And Schwab, by the way, owns TD, right?
Yeah, the government just approved that merger formally.
Ooh, look where we are today. I like that.
This was the, I don't know if it's going to get, oh, that's surprising. I would have thought it would have popped the other way, but yeah, so Schwab bought TD. I'm a former Fidelity guy, but Schwab is now arguably the biggest. I mean, they really added a lot to their brand and their value by buying TD for those more active traders. Schwab typically catered to the wealthier client prior to that. But now it's like fair game. They went down market in a big way. So I think let's do one on Schwab. I like Schwab.
Yeah, I like that. I really like Schwab here because we hit that 78% Fibonacci retracement. We're back down to the 50. That's why we like it. Just giving you all here who are with us the commentary on why we like this.
Like plateauing.
I like that.
There's an area here.
We got that going on.
So yeah, anyway, let's look at the numbers.
By the way, can I just say one thing? Like, if you're with us right now, this is fun. I wake up in the morning here on the West Coast because the markets open up at 6:30. Do you know the fact that the markets open at 6:30 gets me out of bed at 5:45? I make my coffee like I can't wait to see what the market is offering me because I don't care if it's up or down. I'm just looking for movement.
Yeah, that's
Or
it, right? That's it, right? I mean, we're going to make money either way.
I'm going to make money if it's going sideways because, we have a strategy called the Iron Condor, which will have you making money just by you saying, I don't think Facebook is going to get this high. I don't think Facebook's going to get this low. So by saying where Facebook won't go as opposed to where Facebook will go, you can be making money. And I just say Facebook because that's one of the Iron Condors that I have on right now where I'm up $500 and I have a July Condor on.
Yeah, you're exactly. So there's three things we can do, right? We can say was our stance positive? Are we think this
Am I
is going to go up?
bullish?
Are we bullish? Do we think it's going to go down?
Am I
Bearish? Or do we
bearish?
think we're going to go sideways or sideways within a range? These are bullish. The ones we're doing right now, we're saying we think we're bullish on these things.
Right. We're saying we're bullish because they were impacted with everything that happened. The storm of, the oil, the COVID, companies folding. It's what's so sad. There's so many restaurants near me, Dan, that they're not reopening. And, this really has impacted so many businesses. And some of them were, terminally impacted, right?
Yeah, like a small business has a hard time floating in a couple of months, right? They're just trying to make it as it is.
So what Dan is doing right now is taking our idea.
I'm shopping.
We're shopping for options contracts on Schwab, and we're going to take it out to January 2021. So we're saying, we believe by January 2021 that Schwab is going to go from where they are right now, 39 to 45, which isn't a very far movement in price when you look at, the chart that we were looking at on Schwab. So we can make, significant payday by looking at a diagonal option strategy that allows us to, get into these 10 contracts for 10 times 100 times $2.40, which is 2,400, and, make a 100, 200, 300% rate of return. I mean, that's the intention by January.
Yeah, I mean, I'm comfortable with this. Look, and this is the shape we're going for, right? Just to reiterate, this is the shape we want. We want
right
in slope to the upside. It's always going to pay. The tent is always going to be right at 50 or whatever your short strike is, right? And then to slowly fade down from there, but remain positive, right? That's the key.
Right.
To remain
That's
positive.
the key.
Right. It's like same thing with the American Airlines one I showed you.
Right. And I think that's the mistake that some new options traders make. They choose the wrong strikes. And
why do I
say that with confidence? Because I have done that previously, but I don't make those mistakes anymore because I have a tribe that I check in with before I press the go button. And that's what we want for you all to consider, joining our tribe.
Yeah, exactly. And it's very easy trust me, same thing firsthand. I mean, I've been doing this for 10 years, give or take now, but it's, you need hand holding at the beginning. There's so much information out there. Oh, why is my LinkedIn up? I must have clicked it up there.
Do you want to go? There you go. I'm seeing that. Otherwise, yeah.
But yeah, look, I'm comparing the shapes, right? So, comparing this shape, right, to the American Airlines shape, the one that's currently profitable, right? We want this gradual downward sloping and plateau. Gradual downward sloping and plateau, okay? So the Schwab here, I've got the July 50s. I've got the January 45s. And you can go, if you want to do this for an extra year, I mean, you can do that. It's obviously going to be more expensive. Obviously, it doubles it in price, right? So you can make this a longer term trade if that's what you want.
right, which is much more expensive. But I want to reiterate, whatever you pay to get in, that is your max loss. So, you know, if I bought 100 shares of Schwab at 40 and Schwab went to zero, you know,
Yeah,
I'd
and
lose all that money.
just remembering though too is that you want to exit. You're going to want to exit this prior to expiry. This is not one of the ones that you are going to roll through expiry, right? For example, like if we're sitting at, so let me rephrase that. I am going to exit this. I'll tell you guys what to do. I am going to exit this before expiry. If these short strikes are in the money. So if we're sitting at July 16th or July 17th and we're at 55, it's time to get out. Otherwise, you're going to get a whole whack of Schwab in your portfolio at a negative, at a loss.
Right.
The position is worth the same. Like it's just going to convert this into shares, right? If this came through and we're at 51 on July 17th and it closes, you know what happens is we will get 20 times 100 shares of Schwab
Times 51
that are short at 50, and the current price will be 51.
Right.
So it'll be down immediately in the position, which is fine because you have the calls to you can get rid of it if you want to. But.
Yeah, we're always okay, Britt. We're never, Dan and I never enter anything without defined risk. So Dan, I'm just I'm calling us on this because we're close to the end of the hour.
Sure.
Some parting words, just to wrap this up. What we were doing, and we do this all day long with our tribe, is look for opportunities, right? Either bullish or bearish. And we look for, if we're looking for bullish, we look for depressed equities or ETFs where we think there's upside. This is more of what we're doing, swing trading, income trading, but certainly this could be a partial strategy for your long-term portfolio. And from a long-term portfolio perspective, I am dedicated to creating a diversified portfolio, right? So like right now, for my long-term, I'm collecting an additional 2% on average a month, which is 24% a year. Even if my ETFs went sideways as a whole portfolio, I'd be making that monthly. And I have a diversified portfolio, meaning, when the SPY, which is the ETF for the S&P, is down, chances are my GLD, which is the ETF for gold, is up, right? So I'm covering each of my positions. I'm gradually building my portfolio, and I'm looking to make at least 12% a year on average, sometimes more, but at least that. So we are not advisors. We are just regular, real people making real profits who want to join with other real people who are sick and tired of throwing money at advisors who look at their portfolios maybe for 30 minutes a quarter and, give you lip service. They want to take the glory and the gain and the kudos when the market's up, but when the market's down, they're like, oops, well, you just gotta hold on and pray.
Buy more.
Buy more, right? Buy more from me. So so what you're showing us here is Dan's actually creating a trade right now on Schwab, and I'm gonna take a little picture of this.
Yeah, it's not finished yet. This is just the general idea. I'm just
but for those of you who are in our group, we'll just put that on the WhatsApp, what he actually decides to go in. And then Dan, what I want to do right now is just show people who are with us today,
sure.
Either on Facebook or who are with us here in the webinar. Let's see. Do you see my screen? What do you see?
Nope.
No? Okay, let me try it again.
It was there for a second and then it
went away. Cool. All right. So Friday, June 19th, mark your calendars. And, we'll make sure that the URL for opting in for our summit series is optionsforwealth.com. I have to update the date today, but we are doing a 3-hour complimentary Options 101 virtual summit where we're going to step you through accelerated investing, right? What we talked to you about, committing to your number. My number is I want to do 12% plus a year in my long-term portfolio. So I want to create an investing blueprint, and I also want to add to that monthly. So I'm taking advantage of compound interest, right? So how options perform versus traditional investing and trading with stocks, bullish and bearish and sideways plays, and doing what we did today, right? Creating a shopping list, a bargain list to fill up our account with equities that may be depressed, that will probably perform higher. They're on sale right now. And please, anybody who's been with us in the 3-hour, tell everybody here on the chat how amazing it is. We really want for you to join us. So it's optionsforwealth.com. And if you know that you're ready to join our tribe, our fee is so low. I mean, I know people who spend more money on Starbucks than what our monthly fee for our, trading group is. And the fee covers our time. It covers the vetted resources that we rely on. We have a WhatsApp group where we text you our ideas daily. We tell you when we're getting into something, when we're getting out. You can watch us make money or watch us lose money, or you can make money or lose money with us. But we're gaining a whole lot more than we're losing, and we have the stats to prove that. We have a Monday roll up your sleeves learning intensive where we spend about 75 minutes or so every single week with our tribe. We answer questions. We get people really comfortable with a platform. Our platform of choice is Thinkorswim. And we have one-on-one mentoring at reduced rates. And that's what I did with you, Dan. When I first got into trading options, I spent one-on-one time with you. And I learned in, a really private environment that got me further faster. There's never been a better time to learn options because of how exciting the market is right now. We're not watching paint dry, every day a new bucket of paint is thrown at the wall. That's how I talk about this. So if you want to speak with us, email me, Dawn at Options for Wealth. Dan is just one letter different, Dan at Options for Wealth. And we encourage you to get financially astute, become more financially literate, because at the end of the day, knowledge and skills will never be taken away from you. Your job may be taken away from you, an industry may fold, but your understanding of the markets and how to profit from movers or even going sideways will always be there with you with us. So Dan, before we close out, anything you want to say?
Come next Friday, where, this is great for anybody who has dabbled maybe in options before, or just needs a refresher, or is completely brand new. We're going to go at multiple levels, right? We'll go to the new investor, the new options trader, and then we'll have breakouts for people who maybe been doing this for a couple of years and just need to fine tune some stuff. So something for everyone.
Something for everyone. This will be posted on our YouTube channel, this video. Although, we're at a point in time that we're stepping people through it, it is evergreen. So awesome. Thank you.
Good.
I love doing this with you. This is the highlight of my week.
Me too.
I love it. I love it. I love it. We're living our dream, Dano.
That's right. Sunny San Diego, 91 degrees yesterday, 82 today, 83 today.
Yeah.
Hot today.
And we're done by 1 o'clock and we're at the beach. I love it. Cool. I love it.
All right.
All right. You're golfing though, right?
I'm going golfing. Yeah, I'm a golfer. Torrey Pines.
Torrey Pines. Bye now.
Bye, guys.
Y'all.